Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hello everyone, checking in on Twitter, GoPro X and CHK on the daily weekly time frame. So Twitter is in a tight range. We had an inside bar on Friday with the range fitting completely within the range of Thursday. And pretty much what I'm looking at is the range of the past 4 days. You can see that we're just trading sideways here, and I'm looking at the lowest price we've seen, which was back on Wednesday at 1808, and the highest price in that range was 1872. So that's the range that I'm looking at. If we break 1808, we're looking down at 1783, and if we break 1872, we're looking at 1890. So this is a healthy spot for the bulls to be at if they can continue to see a move back to the upside. And I say healthy because the weekly time frame, obviously the bulls didn't want to see that significant of an upper wick. It shows a lack of momentum and follow through. It was very healthy consolidation, a bull flag on the weekly. Bulls tried to see follow through back to try and confirm that with continuation, but then they were squashed down by the end of the week as the bears took back the gains of Thursday on Friday, not seeing the correlation to the overall market. The S&P 500 was very strong on Thursday and Friday. Twitter is not seeing that move. So we have to see the bulls get that break of 1872 for follow-through, and if we do get that move, we will be on the verge of a bullish MACD cross as well. GoPro on the daily time frame still struggling at the middle Bollinger Band resistance. So we were scouting a bearish entry, and I do like the setup heading into next week where we have an inside bar here. A break of 832 is a potential bear entry, and if we see a bull break of 848, we'll be looking up at 855 and patiently waiting for another bearish entry opportunity. So a bear break of the inside bar, and we're going to be looking to head back down to $8 psychological support. We know that we're on the verge of dropping down towards those all-time lows again, especially if the market consolidates again. I keep saying this in these videos for the past month plus, but if the bulls are struggling in the strongest market we have ever seen, what's going to happen if the market consolidates? So we did see the bulls buy the dip here on the weekly time frame. That is a bullish reversal candlestick. Another green week would confirm that, heading back to the weekly middle Bollinger Band resistance. So watching, again, bulls have to close over this weekly middle Bollinger Band in order to prove anything in terms of changing this trend. And that's going to be down in the low 870s to start this week, and we have to see follow-through above that level in order to be backing off as bears. Otherwise, we're going to continue stalking for potential bearish entries. X, lack of follow-through, but we are getting tighter and tighter. It's been an equilibrium pattern since the bulls first showed up. So we have our low of the pullback, our high, higher low, lower high, and the bulls are now hoping that 2003 is now our higher low. So the current range we're watching is 2003 support and 2158 resistance, and the Bollinger Bands are getting tighter to show that, and we're going to stay within these Bollinger Bands unless we see a big high volume breakout kind of day, either closing above resistance or closing below support. But otherwise, we are going to have to ping-pong back and forth, rejecting from the upper Bollinger Band, bouncing off the middle Bollinger Band, if the bulls are going to want to turn things around here. So the weekly time frame for X still not convincing in any way, shape, or form. It's a battle between the 100-week support and the exponential resistance. And so far, 2 weeks in a row, we've got upper wick showing profit-taking, rejecting from those exponential resistances. So the bulls have not been able to see momentum follow through on this weekly time frame, and it is still a potential bear flag at this point. It's an inside week on the weekly time frame. A break of 1952 would be bearish, a break of 2158 would be bullish, but I like the daily chart because it does give us a little bit more specific details in terms of the range that is continuously tightening. CHK wrapping it up. Bear entry after a short-term bounce attempt, a weak bounce attempt, a rejection from exponential resistance, and move back towards the lows, 490 support. We did bounce off 490 again, and back here, 488 from March 9th. But we are on the verge of breaking down. Bulls must hold this $5 level. We closed below it on the weekly time frame. This is the first time we've closed below that level since August. So this is very significant for the bears. And if we see follow through and a break of 488 early this coming week, we're going to be looking down at 475 and then down to 430. There's a lot of downside room here if we continue this lower high, lower low pattern, which we are on the verge of following through. And that is not a good setup for the bulls. If I were a bull, I would absolutely be out of this name. In terms of bearish entries, our new resistance, 522, and the potential bearish entry was breaking the low of Thursday on Friday at 502, indicating that the bulls have had no follow through on this bounce. So I appreciate you watching. We're going to continue to check in on these names. And again, once the market consolidates, which we know is coming at some point in the near-term future, certainly don't want to be fighting any bulls and betting bearish in this market, but these are not bulls. These are overall long-term bears. They're being held up nicely by this market, but if the market begins to consolidate, we are going to be looking for this longer-term downtrend to continue. Thanks again. We'll check back in soon.